Good morning, ladies and gentlemen. Welcome to the Zeder Interim Results presentation. My name is Johann le Roux, and I'll today be taking you through a short presentation of what's transpired at Zeder since our year-end results at the 28th of February this year. On the agenda for today, I'll discuss some noteworthy transactions. Most of these have already been presented to the market, but they do fall within our interim period, so I'll briefly touch on them. I'll discuss our strategy that's remained the same, our interim results, which is basically our sum of the parts and some valuation amendments. Spend some time on our portfolio, our two remaining assets, Zeder and Capespan, and then briefly on prospects, and then I'll be able to answer your questions. So please, if you've got any questions throughout the presentation, please email to the email address on your screen. So in terms of noteworthy transactions, the disposal of our investment in AgriVision Africa, we've signed agreements, we've sold our 100% interest in Zeder Africa, which owns the 56% interest in AgriVision Africa. There's one condition precedent to the agreement, and that's Zambian Competition Commission approval. I can confirm that submission has been lodged. And in terms of transaction terms, the purchase price is held in escrow in a South African account, the full purchase price. There are no warranties or indemnities linked to the transaction, so it's a pretty clean transaction. And if all goes well, we expect closing this transaction during December of the current year. In terms of our history with AgriVision, I think we've been honest with the market. It's been a very difficult investment for us. I think we probably underestimated the dynamics around large-scale corporate commercial farming in Africa. But I think our focus over the last 18 to 24 months on margin enhancements, operational efficiencies and debt reduction has enabled a clean exit. When the transaction closes, there will be an amount of 160 million rand that will come to Zeder. The disposal of our investment in logistics group, that's been announced already. That transaction closed in March, where we received 1.35 billion rand. As a result of that, we also declared a dividend at that stage. The disposal was linked to two earn-out payments. They're not earn-out payments that are linked to any profit warranties. They're linked to certain lease extensions. We've received one of those approvals post the 31st of August. So we received 178 million rand from one of the earnouts. There's still a further earnout due to Zeder or to all TLG shareholders. And even though the timing is uncertain of that, we're still confident that earnout will be achieved and the funds received during this financial year. In terms of our unbundling of Kaap Agri, it's also something we announced at the end of February. That's happened on the 4th of April. Not much more to report, but in effect, the unbundling returned a 1.03 rand to Zeder shareholders. In terms of special dividends, if I look at these four columns on the screen, they all relate to a specific corporate action. In February 2020, special dividend was paid to shareholders as a result of the disposal of Pioneer Foods. The February 2021 special dividend was a result of the disposal of the logistics group. The February 22 special dividend as a result of the disposal of TLG. And the board's resolved to declare a further dividend now as part of our interim results of 10 cents per share, which will equate to about 154 million rand as a result of the earnout received on the TLG transaction. If you combine all these special dividends over the past few years, that means that just over 5.8 billion have been returned to Zeder shareholders. In terms of our strategy, as I mentioned, our strategy remains the same. We need to maximize shareholder wealth. That's a real focus for us. We have two remaining investments. Our focus is definitely on continuing to grow them. The AgriVision disposal, if it goes through in December, it'll mean 160 million rand more for Zeder on this balance sheet. And the board at that stage can evaluate whether further dividends or potentially, capital in our portfolio if there's growth opportunities where the funds will go. And then we're obviously still evaluating disposals when appropriate. And the timing of these is always uncertain and obviously price, but those are the two things that's important to us. I think if you look at the past 6 months, the TLG disposal and the Kaap Agri unbundling had a positive impact on Zeder's strategy of wealth creation. The AgriVision disposal will add more cash to the balance sheet. And I think if you take this with the prior period corporate actions, there's been significant wealth created for Zeder shareholders. I think if you take the special dividends that's been paid plus the Kaap Agri unbundling in terms of value, that would be just over 7.4 billion that's been returned to shareholders. That would now be post the November interim special dividend. That's when the special dividend will be paid. And in a per rand per share basis, that's 4.56 that's been returned to shareholders. If I put that in a screen in the calculus, here you can see if the column on the left-hand side, if you were a Zeder shareholder at 28 February 2019, you would have had a share that was priced at 4.23, and where we are today, or after the interim special dividend, you would have received 4.56 from Zeder. So shareholders would have returned more than what the share price was at 28 February, while obviously still having a Zeder share at the current market price. That would basically mean over the past 3.5 years a 55% growth in the share price for a Zeder shareholder. In terms of our interim results, COVID and the Ukraine conflict, they both have an impact on our portfolio. I think COVID, even though our management teams have been proactive, the supply chain constraints continue, with increased shipping costs. Some channels, there is slightly lower shipping rates, but the key channel for some of our portfolio investments into Europe remains high, and that obviously puts pressure on margins. And then obviously the inefficiencies at our ports is a major obstacle. And the recent Transnet strikes will just add to that, and it's a real risk for the fresh fruit industry. So we have challenges in terms of COVID, or the COVID recovery period, that mostly relates to supply chain issues. In terms of the Russia-Ukraine conflict, I think here it's just a story of inflation. We do have higher soft commodity prices in certain farming sectors, but the high inflation on farms will have an effect on margins, and will affect our entire portfolio companies. In terms of opportunities, we have an investment in Turkey, which is in close proximity to Ukraine and Russia. May Seeds had about a 7% revenue from those areas. But we see opportunities there for this business, as some of the multinationals are withdrawing from the region. In terms of our results, our half-year sum of the parts has decreased from the 4.66 per share to 2.69. The decrease is a direct result of corporate actions. The special dividend that was paid in May, and also the unbundling of Kaap Agri, means that Zeder is a much smaller business currently. If you just combine those two, that's 1.96 that was given back to shareholders. So that explains the drop in our sum of the parts value. Most of our portfolio now is also in an annual input cost cycle, so there's limited adjustments to the valuations at our interim reporting. Zeder still trades at a discount. It's around 30% currently, and that's comparable to other listed holding companies in the market. Obviously, post our 31st of August, as I mentioned, we received the first earnout on the TLG disposal. That means that we have more cash on the balance sheet as at 3 October, and there'll obviously be a resultant decrease in our other assets liabilities as those earnouts were accounted for as a receivable. We have a healthy cash balance currently. The further special dividend will be paid in November, as I mentioned, and post this special dividend in November, we will have about 460 million rand on our balance sheet. So we will be in a good position to assist our portfolio companies if so required, and the board can obviously make assessment at that time if further special dividends will be paid. If I put that in numbers again, you'll see from the end of February, 4.66 to our current 2.69. The end of August column is what we reported to the market, and the 3rd October column, you'll just see the other net assets and liabilities decrease with 178 million rand, and the cash balance increasing with the same amount. So our sum of the parts at our interim reporting period and the 3 October remains the same. I will mention the valuations when I discuss it under our portfolio investments. Yeah, so that brings me to our portfolio review. We have two remaining big investments. Zaad's our specialist seed and agrochemical business run by Antoni Jacobs. Those icons are all the various operating units of this group. It's a big group, operates in many jurisdictions. And this business had a very good year, good growth from the prior periods. You'll see that we're reporting here full year Jan 20, Jan 21, And then June 21, June 22, this business had a change in year end to correspond, to fall kind of outside the key summer crop cycle. And the growth has really been driven by good performance from our agrochemical business, from Agricol, which is our sunflower business, and also maize seeds in Turkey. Those are the businesses that really performed well. When you look at the net debt, there's been a debt reduction. The debt is actually reduced as a result of the Zeder bridge loan that was converted into equity during April of this year. And you must just remember that if you want to do the calculation, we advanced 180 million rand in addition in August 2021. So you should actually take the 1074 plus the 180 minus the 890 to see what the debt reduction was during the period. So as I mentioned, the good performances from Agricol, Farmag and Maize Seed. EA Seed is now also contributing to the business. And that we see as a big growth area for this group in terms of our own IP products in the East African hub. Bakker remains under pressure from COVID. Trading in some of their markets, North Africa and the Middle East, remains under pressure. It's difficult to get your seed in time for specific windows, and this business trading arm was quite dependent on certain NGO tenders, and those just haven't returned to the market. As I mentioned, Russia-Ukraine conflict impact is minimal on maize seed. We see opportunities. Some of the operating environments and some of the African investments remain challenging. So going forward, the focus for this business is on margin enhancement and better cash flow generation. In terms of the valuation, the big driver of the increase in the valuation to 2.384 billion was the conversion of the Zeder loan into equity, and also the improved performance during the COVID recovery period. I think also when you look at Zaad, and if I just go back a slide, you'll see that the earnings of this business have been pretty flat for a period, and it's now obviously had a good growth year. I think for us to really look at the valuation and materially adjust it, we're going to see what the next 6 months holds for this business, just to ensure that a new base has in fact formed for Zaad. In terms of our valuation considerations, we value this business on a EV/EBITDA multiple, adjusted for company-specific factors. We split it between chemicals and seed because they warrant different multiples. And we also have a bottom-up approach where we apply specific multiples to each business unit. So even you see there the averages for Zaad and chemicals within the Zaad group. There will be multiple of 10 applied to a business unit that sells its own IP, and obviously, a multiple of, let's say, 3 applied to a business unit that could be operating in a hyperinflation environment. So we do a bottom-up approach also in terms of our valuation per business unit. Some of our businesses operate in a hyperinflationary environment. We're aware of Zimbabwe. Turkey is now also in a hyperinflationary environment. What we do in terms of reporting our earnings is that we actually do it prior to IAS 29, and we're trying to normalize the EBITDA and recurring earnings to show what the numbers would have looked like prior to the hyperinflation adjustments that IAS 29 brings to you. And in this case, it meant about a 85 million rand downwards adjustment in what we're reporting, for the period. And then obviously we deduct the net debt from the valuation. In terms of our investment in Capespan, the business run by Johann le Roux, the business has had a very good first 6 months in terms of their poem division, even though the profit is the loss is slightly worse for this 6 months. The loss at this time of the year is expected. Capespan is in their annual input cost cycle, so I just want to make it clear that the loss at this stage of the period is as expected. You can obviously also see there slightly more debt on the balance sheet at this stage compared to December, but the business is really also under difficult trading environment. That's not unique to Capespan. That's the fresh fruit industry, lots of challenges, but we've got a very good management team here and world-class farming operations. When I look at the valuation of Capespan, our valuation is slightly decreased here, largely as a result of the difficult trading environment and the continued supply challenges that this business is experiencing. And it's not unique to Capespan. I think the entire fresh fruit industry remains under pressure. The supply chain constraints and inefficiencies, is leading to increased costs and margin pressure. We have longer lead times, obviously the Transnet strikes, as I mentioned, but it's obviously a far bigger risk in an industry where you've got a perishable product. I saw at the mining in Durban that some of the mining groups were obviously also complaining about the Transnet strikes, but you can imagine if you have a perishable product, if it doesn't move, it means a write-off. But this management team is planning well. The key upcoming grape season will be vital for Capespan. As I mentioned, the POEM division had a very good year in terms of volumes and obviously compensates for lower prices in the markets. Unfortunately, some of our citrus farms were negatively affected by strikes, and that obviously meant that we didn't have the increased volume that we had in the POEM division. And then obviously in addition on the citrus side, the EU export markets and regulations bring additional challenges to the industry. Our valuation of Capespan, it's on a Capespan Group NAV adjusted for company-specific factors. We do third-party valuations on all our farming operations and pack houses once a year. We've done that during December and January. So they still form the basis of our valuations, obviously with management input. And our associate investments, 2 of those are valued at PE multiples. And then we apply a market-related discount to this NAV, to get to this valuation that we're reporting part of the results. In terms of our prospects, we're going to focus on growing our investments. I think agricultural conditions are actually mostly favorable. There's obviously margin pressure. COVID and the Russia-Ukraine conflict will have an impact on our portfolio, and obviously the global supply and challenges and inflation pressure, we think will remain. We're still in discussions with several parties on some of our portfolio assets. These will be done in an appropriate and responsible manner, and obviously we'll communicate to the market, when appropriate. And once again, our overall strategy remains. We think we've done well for shareholders over the last 3-year period, and we'll hopefully can continue that and maximize further shareholder wealth. Ladies and gentlemen, that brings me to the end of my presentation. If you maybe can just give me a minute or so to collate all the questions. Just a reminder, the email address is on the first slide. COSEC is the email address, and please, if you can send your questions through, then I will attempt to respond shortly. Thank you. Thank you, ladies and gentlemen. We have a few questions. The first question was, given the reduced size of Zeder, the central and the head office costs, the amount reflected in the income statement of 20 million. Yes, that's largely made up of payroll. It's about 14 million, I think, of salaries and about 6 million of share-based payments. We are a team of 3 people that currently work at Zeder, so we don't have a big team. And I think even at our reduced sum of the parts, that's probably about 0.7% of our sum of the parts. There's a question also about how should we think about taxes incurred, 10 million in H1, any potential remaining CGT taxes on other remaining portfolio investments when realized. Yes, I think the 10 million that as a result of H1 was largely due to the Kaap Agri unbundling. That's our prof tax. Well, there will be a further 10 million that will be paid on prof tax on that disposal at the end of February. And then, yes, I mean, if we dispose of all our assets at the current market prices, there will be a CGT payable by Zeder. Obviously, the Agrivision Africa sale will generate a taxable loss once that's gone through. But if we sell our investments at our remaining values, there will be a CGT liability for Zeder. Then some more questions. Once again, also, what is the head office running costs? I think I've answered that. If I can provide more detail on the approaches, unfortunately not, apart from saying that we are in discussions with a few parties. There's a question of why we impaired 10 million of the TLG agterskot. There were two earn-out payments. One was of 188 million rand and the other one is of 30 million rand. So we had a receivable on our balance sheet of 218. When one of these lease renewals came through, there was a material change in the terms, which resulted in a downwards adjustment of the first earn-out. So instead of the expected 188 million rand, we received 178 million rand, and therefore the 10 million impairment. There's a question of whether we're considering share buybacks. It is a mechanism for us, but I think for now, we've done the maths. You've really got to buy back a lot of shares to make any difference in your share price, or try and close your share price to some of the parts discount. So I think for now it is an option, but we're not actively considering that at the moment. There's a question about what other trade receivables and payables is there on the Zeder sum of the parts. That mainly relates to unclaimed dividends of about 82 million rand, and there's a provision made for payment in terms of a dissenting shareholder that raised their appraisal rights as part of the Pioneer Foods transaction. So those are the two big items. Just give me a second. Okay, there's a question about how much is the remaining earn-out for TLG. That's 30 million rand, as I just mentioned. And there's how are the current port challenges affecting Capespan? We're hearing the conditions have materially worsened. I think, like I said, the pome season is finished. The citrus finish is also finished. I think it's been a very tough year for citrus. Citrus is actually very small in Capespan's life. The pome division is a much larger division. But obviously, I think we're all a little bit nervous about the upcoming grape season, the commodities that's coming off the orchards now is things like blueberries that Capespan doesn't play in. So it'll be interesting to see how it plays out. But I know the industry is communicating with Transnet to see if we can find a way to try and deal with perishables. But no, it's definitely a risk, and we hope that this can all be resolved by the key grape season for Capespan. There's a question of, do we expect the debt in Zaad and Capespan to increase or decrease in the short term? Will excess cash be used to eliminate debt in the underlying businesses? I think if you think about Capespan, it's difficult to say if the debt will increase, decrease. If they have a good year, if we have a very good grape year or a decent grape year, the debt will decrease. Capespan will be able to pay dividends to Zeder if that is the case, but it's a bit early to say. And I think from a Zaad point of view, they've got various growth plans in their portfolio. So I think they'll probably reinvest it in their business or just put it against some of their current outstanding debt facilities. I'm just going to give me a minute. I just want to see. I don't see any more questions coming through. No, I don't have any other questions coming through. If there's any other questions that I haven't answered, please continue to send it to this forum, and I'll reply post the presentation. Yes, so ladies and gentlemen, from my side, thank you very much for your time this morning. I hope the presentation was informative. And as I said, if you've got any other questions, please send it to that email address that was highlighted on the first slide, and I'll respond when I receive them. Thank you very much.